All right. What's up, tycoons? What's up, traders? Got a special video for today. We're doing another tycoon talk. We got Tycoon Leon in this video today, and we're going to start off here actually going over some of the treasury yields right now. There is some really big divergences in the market, and if these divergences play out, we could see things get pretty bullish here very, very soon. Just depends on if those things are going to play out. So we're going to go over those. Smash the like button, subscribe to the channel if you guys are new, and we're going to go ahead and jump into it. So starting with the 2-year treasury yield, we're looking at the weekly chart right now. And so, the main thing that I want to highlight is this divergence. So this is the RSI down here, and we're creating these lower highs on the relative strength index while we've obviously been making these higher highs on the actual price of the yields. And so the yields are going up with this divergence. Typically, with these bearish divergences, you would see some type of bearish activity in the future. So that's something that we've been talking about in the Discord and mentioning. And that's something we're looking at is right here on the 2-year even. We even had a very clean break and retest. So we broke this trend line here that we've been respecting for a really long time. We retesting the trend line now. And if we flip this to resistance from support, then we could actually end up getting this head and shoulders pattern to play out right here, which could, bring the 2-year treasury down to roughly the 3.5% area. And, that's going to result in things like TLT going up. That's going to result in, possibly the stock market going up and the SPX, the NDX, like, S&P and NASDAQ. So that's some of the things that we're looking at right now. And the shorter term treasury yields are going to move quicker than some of the longer term. So if we start to move a little bit forward and we look at the 3-year, okay, the 3-year has the same thing on it, pretty much very similar setup. We have the bearish divergence, lower highs on the relative strength index while we're making higher highs on the weekly chart. We're starting to put in a right shoulder here, but we haven't really broken the major trend line yet. We're still respecting it, right? We just bounced off of it here recently. So we're going to see if we can break those. And we can look at the 5-year as well. Okay, USO 5-year. This is the 5-year treasury yield. And you can see, it's bounced off of this thing here a few times. And, the more times you test the trend line, the weaker it gets, right? So, we got 1, 2, 3, 4 bounces over here. If we come down and break through and test this trend line again, there's a good chance that we could end up breaking it, right? So this is some of the stuff that really I've been looking at right now, and kind of mentioning in the Discord, like this is the 10-year, even the 20-year. They all have pretty much the same setup right now, and it's really, really just interesting to see. So I know we wanted to start off with there going over some of the treasury yields. What do you want to touch on next?
I'm gonna bounce off of TLT and TNX. I'm gonna share my screen real quick. Let me see screen number
Okay.
2. So as you can see, can you see my screen? It actually goes the same direction as the market. Let me get this out of the way. All right, so what we're gonna do is this is what I'm looking at, right? So I see 1, 2, double tap. I'm thinking right here we have that bullish abandoned baby. We have the confirmation right there. We could come up on that 220 SMA right here around like 102 and get rejected. So we could get rejected at like 102.80. And
Yeah,
then
I have a level right there at 102.88 too, as
yeah.
well on TLT.
Oh, see that? I didn't even know that. So we could get rejected right there. If we don't get rejected right there, like you see this bullish divergence on the stochastics. So I like stochastics because it shows you before the RSI does. But yeah, so I'm thinking we go. I'm thinking we do something like this. We catch that gap right up here, make a triple top, and then we drop. And when I say drop, I mean drop like significantly. So I'm thinking we
Yeah,
do
big
that.
drop hard.
I'm thinking we create that triple top because it's just the trend is stupid bullish right now. But I'll show you something else that I was looking at as well on TNX that actually reinforces this. So on the daily as well, we have multiple, as I pull out, multiple bearish gaps on TNX, right? But
Tons.
we only have one bullish gap, right? Or actually 2 after Friday. So this is what I'm thinking. I'm thinking it by the way, TNX goes the inverse of the market. So it goes the opposite way of the market. I'm thinking TNX drops somewhere down here, catches both of these gaps, right? And pushes back up to catch that top gap, right? So what would that mean for the market? So when it drops right here, when it drops right here, it reinforces that TLT will pop to make that triple top. And then when it pops right here, it reinforces that TLT will drop because of the triple top. Once we get up here, I'm thinking that will be the bottom, and we literally
Yeah, and that kind of puts like a quad
eh,
bottom or like a triple bottom on
that's
TNX too, if it drops
right.
down there.
That's a triple bottom. And then we start um, going bearish on TNX, which would make the market bullish momentarily, because we already know like it's probably a recession coming, but probably not right now, because recessions never really come when everybody thinks they're going to come. I don't
Hmm.
know if you can, comment on that, but when everybody thinks something's going to happen,
Well,
I
this has
kind of,
been the most anticipated recession ever, right?
right, right.
The internet and social media have really just kind of changed the dynamic, and so people are really just looking and going over and really just like anticipating this recession a whole lot.
Hmm.
So that definitely has a big part to do with it, and
Hmm.
which is why in fact we kind of haven't even gotten the recession yet, right? Like last year we did get the technical definition of a recession. We had two negative GDP prints in a row.
Hmm.
But the labor market's been too strong, and so they kind of changed the definition of recession a little bit there. But yeah, no, I can definitely see that happening, and it kind of aligns with the Fed funds futures. Like I don't believe you can look at them up on TradingView, so I can't pull it up right now. But the Fed fund futures, they aren't pricing in rate cuts until February of 2024 now.
Hmm.
So, but what's interesting is that people are still anticipating a pause. So, basically the kind of drawing that you just showed real quick. Let me make up a chart real quick here to kind of visualize to people what we're talking about. So we're gonna look at TLT and actually let me pull up the Fed funds rate first. So
Hmm.
a pause, okay, could mean a couple things for the market. All right. If we take a look here, this is going to be the Fed funds rate, and then we're going to look at TLT. And let me zoom out here a little bit. And so something that I want to show to people, let me pull up a daily chart so it's a little bit clearer. Is look what happens once so the Fed funds rate here is in blue, okay, and then we're gonna have TLT in orange right here. So this is a pause. When these flat lines happening, this is the Fed fund rate pausing. So you can see when the pause, TLT actually bottoms before the Fed pause. So, if the Fed is essentially going to be, doing these rate cuts in the summer, or not rate cuts, sorry, but pausing rates sometime in the summer, then there's a high chance that TLT could actually bottom in before the actual pivot comes, right? Because people
Hmm.
are anticipating it. And that's what we've been seeing, right? TLT actually had a sharp pullback, but recently, before we just got January's inflation data, and they revised the November and the December data. TLT was actually rallying pretty hard and essentially calling the Fed's bluff, saying that, hey, no, you guys are actually going to start cutting rates by the end of this year, and you're actually about to pause soon, even though you keep saying higher for longer. And so the bond market's a lot much more, it's way more massive than the stock market in terms of like capital, and really just, it's a much better outlook for the economy than the actual stock market itself. The stock market's much more speculative, but the bond market is all this fixed income, large amount of wealth going into there. And so, typically the bond market will get things right before the stock market does. And so this is a good example here of, just kind of like right before the last rate hike and before things start to flatten out, TLT actually bottoms. And this was back in '06 over here. And then you can see, in these low rate environments, you're kind of starting to see TLT make a little bit of higher highs, and then rates start to go up, right? And then TLT starts to pull back. They cut right here, TLT bottoms before, and then we start to see it really explode. As rates are paused, and then as rates eventually cut, that's when you see a really big spike in TLT. And you can see that kind of like throughout history. when you take a look at these things, right, you see the Fed fund rate come up here, right, and it's rising, TLT is declining, and then what do you see? This is the exact moment of the pause right here, and shortly before TLT bottoms. So, we could actually really see a big, some type of rally if the Fed actually is going to stop cutting or stop hiking and do a pause sometime this summer. TLT is going to price that in early, and sometimes they're right, sometimes they're wrong. Like here previously, they were wrong, and then more inflation data came in kind of hot, and TLT actually went lower. But they're going to try to price this stuff in. So if people get surprised by TLT rallying, we have a lot of data coming out over the next 2 weeks. Powell is going to give two speeches on Tuesday and Wednesday, I think, this upcoming week. So, things are going to be super, super volatile. In my opinion, all he has to do is really not say much or just come off slightly dovish, and the market's going to try to rally and explode. But if he comes out and says, hey, if the next round of inflation data that we're going to get right before our FOMC meeting, if that stuff comes in hot, we're doing 50 basis points, then, you're going to see a lot of pain get priced in the market. But right now, most of the pain is priced in. Most of the rate cuts are priced in.
Real
And a
quick,
lot of this stuff, has already kind of been priced in.
real quick. What do you think? We have on Tuesday we got a 3-year note. On Wednesday we have the 10-year note, and on Thursday we have the 30-year bond. So how do you think that's going to affect this week, along with Powell being on Tuesday and Powell being on Wednesday? Also, NFP non-farmer payroll being this Friday. So three big kind of days, 4 days. What do you think?
Definitely. Give me 1 second real quick. Hold on.
Okay.
But yeah, so okay. When it comes to that, those bond auctions, I normally don't try to predict necessarily how they're gonna really move the market. They are pretty important, and we like to pretty much day trade those days, anytime that there's big auctions. So I mean, I don't know too much. I mean, if you think about it, what they're doing is they're doing quantitative tightening right now. And so, they're essentially they're not coming in and renewing and buying these things. They're letting them just, go to maturity, expire, and then they're not coming in and buying more. So, with quantitative tightening, I mean, technically it should be hurting the market, and affecting it, kind of negatively. But ultimately, I mean, what it should be doing in thesis versus what it's actually doing is going to be, kind of tough to predict essentially. But so I don't know too much. I think that these are going to be some really big auctions, and that it's definitely going to provide some good scalping and day trading opportunities over the next week. I mean, you combine that with Powell speaking twice this week, it's going to be super volatile, and volatility is definitely a trader's environment. Real quick, back on that whole TLT and Fed fund rate subject. So this is what I mean right here, where the TLT in the bond market is essentially calling the Fed's bluff. If you look at these candles, right, we're seeing it continue to go up. The Fed fund rate is just, increasing exponentially, but it's starting to try to bottom out here early, right? And essentially say that, hey, we think that it's about to go flat, or you're about to start cutting. Now they did start pushing the expectations back for the rate cuts to 2024, and so that's pretty much when we're going to see that. I think is, I don't really think we're going to see rate cuts in 2023 anymore, and a lot of people have been talking about that as soon as the year started. But I think that narrative is kind of changing a little bit. But for right now, the charts are giving off a lot of bullish signals, and I know you think the same.
Yeah. Can I show you something?
Yeah, go ahead.
Let me see. Hold on. Let me see which drawing pattern I have this on. I'm gonna just. Okay. Let me share my screen. Okay, here we go.
All right, yeah, we're
Now,
good to go.
you can see my screen, right?
Yeah.
Okay. I got the wrong drawing set on here. Well, let's just do this on the fly. Sorry.
And so what he's pulling up now is the SPX. This is the S&P 500 index. This is pretty much I would say Leon's bread and butter for sure. He's doing a lot of SPX call outs, throughout the week in the Discord. And if you guys ever want to join the Discord, the link is in the description. And you can get access to the Options Trading Tycoons Discord. We have a coupon code Zachly, like the channel name Zachly Trades. Get you a little discount when you join. But he's
All
gonna
right.
go ahead and break down SPX for us here.
Okay, so SPX, right? So this is pretty much the daily chart. This is what everybody is looking at and like, oh my gosh, like this huge trend line right here, right? Everybody's like, is it going to retest the trend line? It retested the trend line right here. So now we have that bullish divergence right here. As you can see, I'm going to put that on there again. Bullish divergence right there, on down. And then if you kind of want to go in there intraday, whether it be daily or like 4 hour, like 1 hour, falling wedge that kind of broke out on Thursday and then on Friday confirmed. Not only that, but you got multiple bullish indicators. So you got the bullish divergence, you got the falling wedge, you have the confirmation for Friday that confirmed the breakout. You also have the bullish engulfing right here that bounced off of, if you look close, that red line is a 200 SMA.
The 200.
So,
yep.
yeah, it bounced off of there on Wednesday. On Thursday, we actually went below there, couldn't hold below there and pushed up, making that bullish divergence. Candle patterns have to confirm. So it confirmed above on Friday, having a gap and go. Usually gaps fill in the market, as you can see. I have them all listed, top and bottom. But it went above what I have, which would be bullish for the daily. But here's what I'm looking at, right? So it's a bunch of bullish indicators. Now, in history, over the past year, maybe a little over a year, beginning January 2021 or 2022 rather, every time this happens, something interesting occurs. Like let's say like right here, right? If we were to put fibs from here to here, usually we get a rejection at the 20 SMA, or if we get above the 20 SMA, we pretty much
reject
get,
those fib levels.
check me out. We pretty much get between the 61.8 and the 78.6% retracement. Literally in between there, that's where it goes. And then we see a significant drop, like 10 to 20%. So you see that drop right there. Boom. Right, let's see. Right here, we did the same thing. Right here, we did the same thing. Right here, as you can see, right here, we did the same thing. So we are super stupid, dumb, crazy, bullish. And if I was market makers, if I was big money, what would I do? Like if I wanted to make money, I would make you think it's going bullish, and then I would take it back, and then I would take it bullish still. Because once again, when everybody knows about something, that's just how I think. So looking at technicals, I think the 20 SMA is that actually, around like 4060, so 4060. If we get above there on the daily chart, then we can actually get between, if you see my levels on the left hand, on the right hand side, the 61.8 retracement is 4071 and 4110. My price target is 4100. So I'm playing it, I'm trading it to 4100, and I'm not touching it. If I'm already in, I'm already in if it goes higher. We got all these gaps up here. I just don't think I don't think we do that. I think that
that once you get above that 61.8% retracement level, we like to call that the fake out level. Like Buddha showed me that's pretty much the fake out level,
Yep.
so they draw in everybody's money and really, gain that liquidity. It's like one big liquidity grab for the next big move, because a lot of people pay attention to the 61.8. It's, it's right around there at the golden pocket. And so people are paying so much attention to it and say, oh, it broke below or it broke above the golden pocket. We're potentially about to get some reversal. But in fact, oftentimes, that tends not to be the case.
And I think I totally agree with that. And I think we hit my target, which is 4100. And I think we drop to take out the October lows. So I think we have like a 15, possibly 20% drop. So the October lows right here, I think we drop to take those out. Could possibly, fill these two gaps. I don't know yet, but I know for for
Well,
a fact.
to me, that'll happen if inflation comes in hot, because what happened is, and you can look on your chart here, January was very bullish, right? And
Mm-hmm,
so January came in bullish, and what happened in February, we got the January inflation data came in hot,
mm-hmm,
and then we actually got revisions to the December and the November data came in hot. And so the entire February has been a consolidation slash pullback. We really only started to rally towards the end of February, closing it out.
mm-hmm.
And that's partly due to some of the bullish data we were looking at, but also because I forgot which chairman it was, but one of them came out,
Waller.
Waller, yeah, and he came out and he's talking about the Fed could see, a pause in rates by this summer. And so, that kind of aligns with what me and you were talking about earlier.
Mm-hmm.
So, that's just, I can definitely see things going there. Actually, I'm gonna pull up a SPX chart, the Wyckoff weekly chart real quick.
I got it on here.
You got it? Okay,
Yeah,
yeah.
but real quick, exactly what you were talking about in February, it caused that bearish divergence right here. So that's right around here range where it started
And
that
so,
bearish
yeah, we're
divergence.
starting to see the technicals really line up with a lot of the data. And so sometimes the
Right.
technicals can be a leading indicator. One of the things that I always like to say is that price action precedes the news.
Mm-hmm.
So, heading into February, if you zoom back to the left a little bit so we can show the divergence. But the bearish divergence started forming there in January. And then as soon
Mm-hmm.
as February hit, like right there around February 6th, that's when the bearish divergence actually started to play out. And then that's when we actually got a lot of the inflation data.
Mm-hmm.
And so, when to bring things full circle, when we were looking at the treasury yields and those bearish divergences on the treasury yields, I mentioned that, like, if we get, soft inflation data this week, and if Powell comes out, soft and a little bit dovish, then that's really going to be the catalyst that could really send the market, on a big run,
But check me out.
especially
Check me
with
out.
those divergences.
I agree with you. We always do this. I agree with you, which could send the market on a big run. I think we got to be careful because it's an okie doke. It's an okie doke. So what's going to happen? It's going to be a big run, but it's probably not going to like close there on the daily. The daily is going to close. I'm pretty sure, bro. Like it's going to close right along this line on the stochastics. I'm a
Mm-hmm.
perfectionist, so I had to like fix that just now. But I think that's why we have this bullish divergence right here. We're going to go up.
Is you're going to send it up there?
We're going to send it right up here, which aligns with what you said, the golden pocket between 6.8% retracement and 78.6 retracement. Take it to my 4,100 price target. I lowball it. If we go above 4,100, I'm happy. But
Hey, do you see the
I
head and
think
shoulders forming too?
I do. But check me out. Head and shoulders right here. Boom. I didn't even post or say that because this next thing, right? So we tap this trend line on the stochastics, and then we drop, as I said, or as we said rather, and we drop all the way down, take out the October lows on the stochastics as we're dropping. Upon us having a bullish reversal or whatever, it's going to cause a bullish divergence on the stochastics, and that is when we'll know, okay, it's pulling back like a slingshot to take us possibly back above all-time highs. So that's what I'm looking at. And the weekly, as you were talking about, Wyckoff redistribution.
Yeah, so
um
that
I,
Wyckoff chart is really interesting because that's what could take us down to fill those 3,300 gaps,
right, as you
on the SPX.
it's a little cluttered, but as you can see, I have over here spring, correction, and then redistribution. So what essentially would happen is this would be the, spring right here, right? And then this is the throwback right here. So the throwback is like it makes one more chance. Can't do it. You see that bearish reversal, boom, drops back down. And if anybody knows about Wyckoff schematics, this doesn't have to turn into a redistribution. So this right here, boom, boom, that could be the that could be just the accumulation happening right now, dropping down into the spring. So we don't have to do a redistribution all the way down here to 27.63 and 31.57. We could just follow this Wyckoff accumulation right here, because that's what this is. Boom, boom, boom. Now, we should be coming up here to drop down possibly into the spring to launch us. And that's what I'm looking at. It's like, trading is like football. Like, okay, I got to call an audible because what I'm seeing on the price action is not aligning. And actually, if you see on the weekly chart, we have the bearish divergence right here as well, which shows that it's going to come back. So that's what we're looking at right there. You see, boom, bearish divergence, and that's So that's what I'm thinking. I'm thinking we go up to 4,100. I don't know how long we'll stay in there. I don't know if we'll go above there, but I do know that thing is coming back. And then when it comes back down, make money on the way down, so you can make money on the way up. So that's what do you think, bro?
Yeah, I like it. I'm about to I want to get into crypto real quick. I'm gonna show the that SPX Wyckoff thing. Just in case people aren't a little bit too familiar with it, I have it uh I have it a little bit cleaner on its own separate chart here, but so this is what Leon's talking about right here. So when he was mentioning the spring and everything, right? We had the spring, we got our breakdown distribution, all right, and then this was that throwback that he was mentioning. And we're kind of in the correction phase right now, but as he was saying, this doesn't have to go into redistribution, right? Now that's what we're tracking, and that's what would take us down to fill some of those bearish gaps that he was just showing on the chart. From the 3,800 to even the 2,800 region. That's what redistribution would look like, but this could actually be turning into accumulation and send things back up. So that's kind of just what he was mentioning there real quick. And I just wanted to, I just have a separate chart with it just so it's a little bit cleaner for some people. But I want to go into crypto real quick. Let's look at Bitcoin because we're taking a look at bonds, right? We're seeing a little bit of bullish signals on the technicals when it comes to bonds. Let's go into crypto now, right? We just looked at the stock market. Let's go ahead and take a look at Bitcoin on the daily time frame. Okay, and so this is what I've man, I just moved my drawing. This is what I've got here on Bitcoin for the daily time frame, and I keep moving my drawings. But we do have some bearish divergence here along the RSI. Okay, there is some bearish divergence here. We're creating higher highs, making higher lows. But we've tested this trend line here multiple times. If we go on a rally, there is a chance we could break out above this bearish divergence trend line and flip it to support from resistance, right? We do have this little overhead supply zone on Bitcoin from the past, from right around this region over here. We're still battling that resistance right around the 25,000 region. But we could kind of be seeing everything starting to rally here. Okay, and that's what's really going to be interesting to me. We're holding above the major retracement levels of support, right? And so we bounced off the 38.2. When you bounce off the 38.2, that signifies a strong uptrend, right? Now there's definitely still the possibility we could come back down and retest, but anything still above 19,000 on Bitcoin is ultimately bullish, right? So even if we do end up getting some type of a pullback, there is the chance that we could get a nice larger three-wave structure, and that would bring Bitcoin up to about the $30,000 price area. So I definitely could see that coming here soon. And it's just going to be interesting to see, like if we get some bullish data in the market when it comes to inflation, if Powell comes out a little bit dovish, that's really going to skyrocket risk on assets, right? And Bitcoin is typically considered very risk on. And so really that could bring us back up to retest our supply zone up here in the 25,000 region. Now we may put in a double top, but we could end up exploding and hitting, around that 30,000 mark.
Can I jump in right there? That is actually scary how close our charts are, because two things. Let me share something real quick, and
yeah,
I want to share my screen.
You can share your screen.
All right, so it's very scary, bro. I pulled up my Bitcoin futures chart, as you could possibly see, right? So this is the weekly. So from my weekly, it really looks like we have been bullish on Bitcoin since January. Okay.
Yeah. The crypto market has been super bullish since January.
But honestly, right at, I want to say right when we get above
about 25,000.
I like the, I'm flexing this, bro. Yeah, About 25,000. You're right. So as soon as we get above 25,000, we can go to 36, like 37,000 on
Yeah,
Bitcoin.
very, very, very
And
possible.
and one thing I had to say before that is Bitcoin's inflation rate is now 3 times lower than the US dollar. How you feel about that?
Oh yeah, bro. I
Looking
mean,
at the technicals and then also getting that information like over the last couple of days, 3 times lower than the US dollar.
you know
Like,
me, bro. I'm bullish
come
on
on.
crypto.
Yeah.
I'm bullish on crypto, bro. And I think definitely Bitcoin can hit that 100K price. I don't know when, but eventually we're gonna hit the max supply of Bitcoin. And that's gonna be a pretty big deal. The reason that I think it's gonna be a pretty big deal is because of the fact that if we get institutional adoption, right? And what I mean by that is, Kathy Woods has a really good,
Projection.
projection about it,
Yeah.
and she's targeting 1 million. But if we just get 3% of it, like a large institutional adoption, then Bitcoin, that's gonna bring in trillions of dollars just to Bitcoin, not to the entire crypto market, all market cap, right? Like if we go here, we can look up the total. And so we can see here at the peaks, okay, let me make this just a line chart real quick. Put some people on some game real quick in case they didn't know.
Mhm.
So right over here, right, we came up right around that $3 trillion market cap. Basically, like there's so much money in the world, and if Bitcoin it comes to the point where it's regulated, okay, and a lot of people are against regulation, but once cryptocurrency sees regulation, what's going to happen is we're talking billion-dollar companies, right? Huge companies, even
They're gonna feel
trillion-dollar
safer.
companies. They're
They're gonna feel
what they're going to
safer.
do is they're going to put 1% of their money, at least 1%, right? At least 1% of their money in Bitcoin to diversify, because that's what these big things do is, right? These big companies, they also make investments, and people don't realize that because they have all this cash, and cash is not only just the best thing to put your money in, right? They're going to put some of their money in bonds, they're going to put some of their money in Bitcoin as well, right? And so that's really where you're going to see the big mass adoption in crypto, is once those institutions feel comfortable and feel regulated enough, there's going to be trillions of dollars flooding into the crypto market space. And as time goes on, the supply of Bitcoin is limited, right? And so what I actually want to show here is we're looking at the total crypto market cap. We're actually going to throw on the total DeFi market cap right here as well. And so this is
Mhm.
something that I've gone over before, but we're going to zoom into the January time period, right? And so we're going to go to the beginning of 2023. Let me just drag this over here so it's precise. So this is the beginning. And so one of the things that I've mentioned in many of my crypto videos, this is how you spot a bull market. Okay, right here, right? Total
Mhm.
DeFi market cap is here in orange, and then the total crypto market cap as a whole is here in blue. And so the signs of a bull market when it comes to cryptocurrency is DeFi outperforming the total market cap. Okay, and look at what's happened. This is the very beginning of January that we have on the chart on the time frame here, right? You can see it's January 2023 right here, and look what's happened. DeFi has outperformed crypto the entire 2023. This is
Mhm.
a sign of a bullish market, right? And so this is what you want to see. You want to see DeFi outperforming. It's something that a lot of people don't really pay attention to, right? If we zoom out a little bit and we take a look at the year of 2022, okay, you can see DeFi underperforming. Okay, and so this is the signs of a bear market, right? This is when
Mhm.
you're in a bear market cycle. And so the summer of 2022, there was a really big rally across markets in general. Okay, and you can see these things rallying, but look what ends up happening. Okay, we end up seeing that the DeFi market cap is hugely underperforming the total crypto market cap as a whole, and so that's a really good indicator a lot of people don't pay attention to. And I
Mhm.
mentioned in January, I said, look, guys, look at what's happening right now. Okay, we could be in a bull market cycle right now, and since 2023 has started, that's exactly what we've seen. We've seen nothing but the DeFi market cap in DeFi space really outperform crypto. And if that continues, then that's when we may see those 30,000, 35, 37,000 price targets hit on Bitcoin. If DeFi really continues to outperform,
All right.
it's almost up 2x.
Yep. And then also, I want to share my screen again because you hit the nail right on the head. Like legit, you hit the nail right on the head with the DeFi. I just want to kind of add a little seasoning to that. So let me share my chart real quick. I'm gonna go back to Bitcoin because
Okay.
we're gonna look at the monthly. Can you see it?
Yeah, for sure.
All right. So actually this right here is consolidation since last June. So we dropped in last June and then we consolidated from last June till now. Okay. So a breakout, this is actually a bullish falling wedge. So why not? All right. So that's a falling wedge. Okay. Now it goes along with everything else that I see. So I'm not just going to say, oh, it's a falling wedge, we're bullish. No, it's a falling wedge. So we can possibly honestly get to above 23, well, 23,536. Above that, I would say it's bullish. Above 25,000, it's like a no-brainer. We're gonna go to this is I just pulled this up. So 32,462. And then above that, the first price target, my first true price target, which is 41,388 over, the next couple months. So this is a monthly chart. Honestly, long term, like you said, it's just a no-brainer if you want to pretty much double or more your money with Bitcoin to hop in when it gets above 23,500 to 25,000. Because from what this is saying, you see it,
Mm-hmm.
the second price target is 60,000. And it's a couple of imbalances in there that I